held its 295th meeting on the 20th and 21st of May 2024 to review recent economic and financial developments and assess risks to the outlook. Decisions of the MPC. The committee's decisions are as follows. 1. Raise the MPR by 150 basis points to 26.25% from 24.75%. 2. Retain the asymmetric corridor around the MPR to plus 100 to minus 300 basis points. 3. Retain the cash reserve ratio of deposit money banks at 45%. And 4. Retain the liquidity ratio at 30%. Considerations. The key focus of the MPC at this meeting remained to achieve price stability by effectively using tools available to the Monetary Authority to rein in inflation. Members observed that while year-on-year headline inflation in April 2024 rose moderately, the month-on-month measures of headline, food, and core all declined significantly. This follows a decline month-on-month of headline and food measures in March 2024, suggesting that the recent tight monetary policy stance of the bank is beginning to yield the desired outcomes. The MPC, however, noted that the inflationary pressure continues to be driven largely by food inflation. The committee thus reiterated several challenges confronting the effective moderation of food inflation, to include rising costs of transportation of farm produce, infrastructure-related constraints along the line of distribution network, security challenges in some food-producing areas, and exchange rate pass-through to domestic prices for imported food items. The MPC urged that more be done to address the security of farming communities to guarantee improved food production in these areas. Members further observed the recent volatility in the foreign exchange market, attributing this to seasonal demand, a reflection of the interplay between demand and supply in a freely functioning market system. The committee also noted the marginal increase in the external reserve balance between March and April 2024 and urged the bank to sustain its focus on accretion to reserves. The MPC commended the bank for the recent approval of licenses of 14 international money transfer operators, IMTOs. This is expected to improve competition and lower the cost of transactions, thus attracting more remittances through formal channels. The committee noted with satisfaction that the banking system remains safe, sound, and stable despite the headwinds confronting the economy. It commended the recent recapitalization initiative and urged the management to sustain its regulatory oversight to ensure the continued stability of the banking system. Members focused on the best policy approach to continue to guide the economy towards achieving an overall macroeconomic balance. At this meeting, the committee was thus faced with the option of either continuing with policy tightening or hold to observe the impact of previous rate hikes. Following an extensive review of risks and the near-term inflation outlook, the balance of risk suggests further tightening of policy to build on the benefits accruing from previous rate hikes. Key developments in the domestic and global economies. Domestic headline inflation rose further to 33.69. That again has got to be married with consistency in reforms, which I believe we're seeing and which I am certain from the outlook that comes out from the international financial community. And when we talk about Fitch, not just Fitch, but even the international banks who basically look at the reforms that are going on, test the assumptions that are made, and come out with their own recommendations. And what we see generally is a positive outlook from that sector.
All right, good afternoon, Mr. Governor. My name is James Semejo with This Day. Inflationary pressures have persisted despite CBN's tightening stance. And analysts are beginning to say this is hurting manufacturing and small businesses. What else would the bank be doing, maybe differently, to address this? Thank you very much, sir.
Thank you very much, Mr. Thisday. A very good question. A very, very good question. And I think it's important to say that yes, in terms of looking at the inflationary figure over the past year, yes, it may appear that inflation is indeed getting more and more of an issue. Yeah, and frankly, let me moderate that by saying that any kind of inflation, in my view, is an issue. So let me just moderate that by saying that. However, I think there is light at the end of the tunnel. And that is because much as we see an increase in inflation, in the inflationary figures, when you go down to the specifics in terms of food, in terms of core, in terms of headline inflation, you see that it is moderating and decelerating in increment. Okay, and that's the good news, because for the first time since, I would say, October, we've seen a relatively significant moderation in the rate of increase on those components of inflation that I was talking about. So that is very good news. It's very good news. And I believe very strongly that the tools that the central bank is using is working. It is working. Now, I've said several times, and I'll say again, there's no magic wand. These are things that need to take their own time. The pass-through and the effect of the measures in advanced countries, in developing countries, they do take time. But at least I'm confident, and the figures show it themselves, that we are beginning to get some relief. And I believe that in another couple of months or so time, we will see the more positive outcomes from what it is the central bank has been doing.
Thank you, Mr. Governor, members of the MPC. My name is Sunday Michael Ogu. I write for Daily Trust newspaper. Between the last MPC and today, the CBN announced a recapitalization plan and also stipulated April 30th as the deadline for the submission of the implementation plans by the commercial bank. I would like to know if we would expect the CBN to share that plan with the general public. Thank you.
Well, first, thank you very much, Sunday. Yeah. First and foremost, let me re-emphasize that as the central bank, it is our responsibility to ensure that the banking system is strong and is resilient. And I'm very happy to say, and we said it in the MPC communique, that the banking system is indeed sound and safe and fit for purpose. As far as we can see, it is sound and safe. So there's nothing for anybody to have any anxieties about. In terms of in terms of what we have done with respect to recapitalization, of course, we're looking forward and saying that we need the banking industry to be a lot stronger and more robust, particularly considering the $1 trillion economy that the federal government is anchored itself towards. We need a much stronger banking system, and we need a banking system that will have sufficient enough shock absorbers in the case of any uncertainties within both the domestic and international ecosystem. And a lot of what, if some of you think back on it, a lot of what has happened in worldwide, quite frankly, over the past 3 months, 6 months, 9 months, 1 year, nobody would have predicted these things would have happened. Nobody. All the different, all the relatively strong attacks that have been taking place on the financial and economic ecosystem have been relatively challenging. And it's important that we bolster ourselves, we get ourselves ready, so that in case there are further ones, we're in a position to withstand them. We have gotten much of the feedback from the banks with respect to what their plans are. And again, to emphasize to those of you who may not remember, we gave them a long gestation period, really, to do this. And we are hoping that whole capitalization program will be wrapped up within 2 years. So we're not putting any of the banks under excessive pressure or anything like that. It is, the whole idea is to work with them to ensure that we can strengthen the banking system that we already have. Once we have finished that review of the submissions that have been made, we will communicate that directly to the banks. Thank you.
Good afternoon, Mr. Governor. My name is Nduka Chejine of the Nation newspaper. Recently, the central bank issued 2 circulars on cybersecurity. One generated a lot of pushback from the public, forcing the president to suspend the levy. Can you please tell us why the central bank took the decision in the first instance to issue that circular? Thank you very much.
Thank you. I'll be surprised if that question didn't come up. Now, for clarity, the cyber security levy originated from the Cybercrime Act, of 2024. That is where it came out from. There was 2015, then 2024. The Act introduced the levy, which was, and again, important to say, given that it is an act, it was considered extensively by both houses, both the House of Rep and the Senate. And of course, there was a public hearing as a result. And then after that, there was, of course, the issue of the levy, which was stated clearly as 0.5% was embedded within the final law. Now, as central bank and as bankers to government, we were merely implementing a law that had been enacted. That's all we were doing. We're implementing a law that had been enacted. And subsequently, as bankers to government, as the federal government amended its position, we have withdrawn the circular that we've issued to the various banks. Thank you.
Thank you so much, Mr. Governor. I've received some questions from some journalists from Lagos. A question from Bukola Arulambo of Leadership newspaper. Mr. Governor, permit me to ask this question on his behalf. He said, Mr. Governor, the CBN in a publication last week stated that it had kickstarted its strategy to double remittances. Can you throw more light on this? Thank you.
Thank you very much for that question, Bukola. A very important question. And let me, first of all, give some context to this, because I think that is very important when we talk about this. Now, I'm sure over the years, many of you would have read various publications, much of which at the time, of course, was led by the World Bank, in which they figured that Nigeria had a significant amount of remittances from the diaspora. And we know, we are all very aware, I'm sure everybody here has cousins, uncles, brothers who live outside and want to send money into the country to their relatives, their loved ones. I'm sure that is a constant thing on everybody's mind. And we've identified, of course, that this is a very, very critical element of inflows coming into the country. In fact, it's estimated to represent about 6% of our GDP. 6% of our GDP. And so, therefore, we felt that it was important from the central bank perspective to have a strategy to engage this sector. Now, within that, the entities that seem to play the biggest part, the biggest role within that sector are the IMTOs. They play a very, very major role there. And so for us, it was important for us to meet them. And we had originally had a virtual meeting earlier on. And then during my visit to the World Bank IMF meetings last month, we actually reached out and invited all of them to come for a meeting. And I must say I was very impressed that many of them flew in from different parts of the world. I was very, very impressed. Okay, and we had a number of hours in private discussions and understanding what their problems were and seeing how we could help them to ensure that they are more effective in the things they do. And of course, sharing the challenges that we saw in the future for the country and that everybody had a role to play. And I must say that they responded very, very positively. Two aspects that concerned them. One was on the issue of the price and the commissions and the charges they are having to pay. And of course, the issue of, at some point in time, the rates. And of course, since the rates have converged, that became less of an issue, but they are encouraged to use the official channels to advance the cause of the very laudable efforts that they are making to enhance the flows of foreign currency coming in. Shortly after that, we set up a task force, and that task force reports to myself. So I'm very, very important. I'm very, very interested in how we make progress on this, and I'm certain that we will be successful in doing it. Our target, of course, is to double the remittance flow within the year. And as I said, we have started that process of engaging to ensure that it happens. We don't want to come back later on and tell stories to anybody. We want to ensure that we know exactly what is required. And of course, the dialogue will be an ongoing one. It's nothing that will stop. It will be ongoing to see how we can strengthen our processes, where we need to adopt, tighter and better regulations, and where we need to adopt technology. We will do so. As a furtherance to that, we recently gave licenses to 14 IMTOs. And that, again, is all with a bid to creating more competition in the sector and bringing down the cost of transactions.